Hey everyone, welcome back. I've just come back from NATP Exposium and brought a lot of updates and insights for electrical businesses, especially for those involved in solar and clean energy. I'll create a separate session for it, so stay tuned. Over the past few weeks, we've talked about why profit doesn't always mean cash and how pricing mistakes quietly destroy your margins and why strong financial systems matter way more than most people realize. Today, we're talking about something different. What actually happens when an electrical company grows fast without the financial strategy to support it? Let's go into it. So many companies are out there scaling, landing bigger jobs, expanding into new markets, adding crews and equipment. But what they don't realize is that growth without financial visibility is risky. It looks like success, but underneath the surface, it's often chaos. You are growing, you are hiring, jobs are rolling in, and it feels like the company is finally taking off. But behind the scenes, tracks start forming. Cash gets tight, systems fall behind, nobody has time to fix it because the team is too busy trying to keep up. That's the trap. Growth can feel like momentum, but you're not watching the numbers, it's a ticking time bomb. Here's what a lot of owners believe: if we are busy and revenue looks good, we must be fine. But fast growth can actually hide a lot of issues. Margins are getting thinner. You're wasting money without realizing it. Cash is unpredictable. You're relying on old systems that no longer fit. And you have no idea which jobs are profitable and which ones are bleeding. Being busy doesn't mean your business is healthy. This is what we'll see all the time when companies grow without financial infrastructure. No one is checking actuals against estimates. The field team and finance team don't talk. There is no process for scaling, just reacting. The bookkeeper records what happened, the CPA files the return, and the owner finds out about the problem after the money is already gone. This isn't the exception, that's the norm. And let me tell you about the real company we work with. They were doing nine-figure in revenue and started expanding fast, doubled their revenue over 3 years. They were landing great jobs, entering new markets. On the surface, total success. But here's what was happening behind the scenes. Accounts payable was broken. Invoices weren't even getting entered, and vendors frozen their accounts. Accounts receivable was a mess. No follow-up, no process, they just waited for checks. No purchase order systems. General managers were buying equipment with no approval, blowing past budgets. Invoices weren't validated. Some got paid twice, even three times. Their ERP showed total margin, but they had no idea what was happening by project or service line. They were still bidding with old cost data. And there was zero cash forecasting, and leadership was emotionally attached to projects that were bleeding money. The result? They lost nearly $2 million, despite having record revenue. Now, here's what a real financial team would be done differently. Clean up AP, PO, and approvals so spending was controlled. Put systems in place to track AR and follow up on unpaid invoices. Set up job level margin tracking so leadership could see exactly what was profitable. Updated the cost data they were using to bid jobs. Implemented cash flow forecasting to avoid surprises. Added strategic oversight so they could say no to money losing work. And automated a lot of the day-to-day processes, saving time, reducing overtime, and helping the admin team breathe. That's the difference between just doing the books and actually running a financially strong business. You wouldn't send a crew to the field without tools. So why run a multi-dollar million business without financial visibility? If you're growing and you want that growth to last, you need structure, you need strategy, and you need someone watching the numbers so you can focus on running the business. At Sharapova and Co., that's what we do. We plug into business with fractional controller or CFO services, custom built financial systems, job costing and margin tracking, strategic tax planning, and automation that makes your life easier and not harder. We don't just clean up your numbers, we help you build a business that's actually designed to grow profitably. Here's the key takeaway. If your business is growing but your financial visibility hasn't, you are exposed. Bookkeepers and CPAs help you stay compliant, but they won't show you where the money is leaking or how to fix it. That's what the real financial team does. We help you grow profitably by tracking margins, managing cash flow, and flagging issues before they cost you. Today, that was an overview of what actually happens when an electrical company grows fast without the financial strategy to support it. In the next few weeks, we are going deeper, one issue at a time. Job costing and pricing strategy, how companies lose money before the job even starts. Cash flow traps, and why profits isn't enough. PO and AP systems, the leak you don't see until it's too late. AR and collections, how to get paid faster and stay ahead of payroll. And automated processes, how optimization and process improvements can save over 2,000 working hours a year. I'll give you an example of how we merge two office positions into one just using automation. Each episode will give you real examples and practical fixes so you can tighten up your numbers and grow with confidence. So stay tuned and see you soon. Thank you. Bye bye.